Joining us now, MSNBC senior White House reporter Vaughn Hilliard from Busan, South Korea, CNBC senior analyst and commentator Ron Insana, and University of Michigan professor of economics and public policy Justin Wolfers. Quarter point cut just confirmed. So, Justin, I'm going to get you on that to start.
Yeah, I've got that right in front of me. So pretty much what everyone expected would happen happened. Don't read too much into this. This is not the Fed putting its foot on the gas. It's really the Fed taking its foot off the brake. It had put the brakes on to deal with the post-pandemic inflation. Now it's all the way back to neutral. What do you do when you're in a world where there's no more data? It can be really hard to figure out the next steps, but you do know being neutral is a safe place to be. There's two other things that have struck me straight away. First of all, Stephen Moran, the new Fed member, former Trump CEA chair, beclowns himself for a second meeting in a row calling for a 50 basis point cut. He's tried to explain his logic in the past, and frankly, it's illogical. And you actually got another Fed board member who's gone the other way and said there should have been no change whatsoever. So you've got a split board there.
So he wants a 50% cut. Is that what you said?
50 basis point,
50
half
basis
a percentage point. Schmidt wants 0. The rest of the committee was at 1/4. And that really tells you that, yes, there is a debate, but there are two sides to this debate.
That is really interesting. So, Ron, let's try to understand what Jerome Powell and the Fed broadly is trying to do here, why it is so complicated in this moment, because you see the stock market hitting crazy highs again. People are feeling good if they're in the market. Those in the top are doing really well. But those in the bottom are really struggling. The K-shaped economy, as we've discussed. How difficult does that make things for the Fed?
Well, extremely difficult, particularly since in the release they also note, Katy, that inflation remains elevated and above the Fed's target, and so we are a little bit off the highs, as you can see. And so this split too that Justin just referred to shows that there are still warring camps within the Federal Reserve. Some of whom are worried about inflation remain elevated. Some who are worried about, as you pointed out at the top of the show, a deteriorating labor market. And yet, at the very same time, with this AI boom and with wealthier people spending a lot of money, gross domestic product or economic growth is actually stronger than anticipated. So this is the type of conundrum the Fed has not faced in the past, particularly when you've got stocks making new all-time highs. It's a very rare environment in which the Federal Reserve actually cuts rates when you have this combination of economic factors all taking place at one time. So my guess is they might, or Jay Powell in his commentary coming up, might indicate a pause, given that we may not get any inflation or jobs data for another month, month and a half, maybe even 2 months.
Can you help me understand a little bit more? When you're talking about the wealthy folks in this country still spending enough to keep GDP up, there was a number out there the other day that said that 10% of the nation, of Americans, are paying for about half of the purchases. They're the ones doing almost half of all the purchases in the country, which is keeping things afloat. How does an economy continue on a path like that? How does it stay healthy on a path like that?
Well, you have to hope that they keep spending, for one. I mean, that's Mark Zandi of Moody's Analytics is the one who put out that particular number, 49.2% of all consumer spending done by the top 10% of all wage earners in the United States. And
Wild
below
number.
that, yeah, it's a wild number. And in the middle, you have people keeping pace with inflation. And then in the lower economic quartiles, you have those who are falling behind. And don't forget, with the government shutdown, it's altogether possible that food stamp benefits will disappear over the weekend, which hurts those at the lower end of the spectrum even more. And so you have just an environment. We've only seen this maybe 1 or 2 times in my 41 years of following the economy, where we see such a major split between those doing well and those doing not so well. But it does create a very difficult environment for the Fed. They're worried about the labor markets for certain deteriorating, as you mentioned earlier, but they're also still worried about the fact that even if tariffs come down a bit and trade deals are stuck, prices remain elevated, and that makes it hard for people to make purchases. So the Fed's really between a rock and a hard place here with this very much bifurcated economy.
What is the saying, Justin, that a rising tide lifts all boats? These boats are not all being lifted. Look at these prices right here. Ron was saying this has only happened a handful of times. What normally happens after?
Yeah, so normally what we get is either a strong economy, which is bad for inflation, or a weak economy, which is good for inflation. And what we have is two bad things happening both at the same time right now. And the real question is, how do you respond to that? So we've got high and rising inflation. It's about 3%, and there's a whole lot of tariffs that might push that a little higher over the next few months. We've had the unemployment rate drift up over the last year or two. And while the GDP statistics have been a little stronger, the reality is if unemployment's drifting up, you're not doing things right. Very, very hard place for the Fed to be. I've got a very good secret plan for how we can get rid of this supply shock, by the way, Katy. It's a supply shock that comes about entirely because of uncertainty induced by the White House and tariffs. So if they just walked back the stuff they've been doing, I think you'd see inflation start to calm down a little, and you might see the labour market start to stabilise.
Last word to you.
Mate, the one thing I want to come back to is the interest on the Fed. I was just trying to do some research while we were on the air, and the last time in which we saw dissent on one side and dissent on the other looks like it may be over 10 years ago. This is once in a blue moon territory, telling us that we're in a funny world right now.
Indeed, we are. Justin Wolfers, Ron Insana, Vaughn Hilliard. Gentlemen, thank you.